Every time you swipe your card, take a loan, or pay interest, someone profits. But not in the way you think. There's a formula hidden inside every loan, mortgage, and credit system that quietly transfers your future income into someone else's wealth. This isn't about simple interest or bad budgeting. It's a structural design built into the global financial system itself. And once you see it, you'll understand why, no matter how much debt the world carries, the same people always win. Section 1. The origin of the debt machine. To uncover this formula, we need to travel back to the moment money stopped being real. The year was 1971. President Richard Nixon announced that the US dollar would no longer be backed by gold. In that single moment, money transformed from a store of value into a system of promises. From that day on, every dollar became a unit of debt, not wealth, because under the new system, money wasn't created by governments, it was created by banks. Every time a bank gives a loan, it doesn't hand over someone else's savings. It creates new money out of nothing and records it as debt in your name. That's fractional reserve banking, a system where banks lend far more than they actually hold. The more they lend, the more profit they make from your obligation to pay it back with interest. Section 2. The formula hidden in plain sight. So what's the formula? It's shockingly simple. Your debt equals their asset. Every time you borrow for a house, a car, or an education, your debt becomes a financial product that banks and investors trade for profit. When you sign a mortgage, that loan, ESNT, sitting in your local bank, it's bundled with thousands of others, turned into a mortgage-backed security, and sold on the open market. Investors earn money from your payments. Banks earn fees for creating the loan. And you, the one who produces real value, spend decades repaying something that was never real to begin with. This isn't just about individual loans, it's the engine of the global economy. Section 3. The expansion of the debt economy. After the 1970s, debt exploded. Governments borrowed to fund wars, corporations borrowed to buy back stock, and consumers borrowed to chase lifestyles inflated by credit. The brilliance, or the trap, of the formula is this: the more debt exists, the more assets exist. The more assets exist, the richer the financial elite appear. By 2025, global debt has surpassed $320 trillion, over 3 times the world's GDP. Every dollar of that debt is someone's profit. Central banks now print money not to fund productivity, but to sustain the illusion that this debt-based wealth is stable. Because if the borrowing stops, the entire machine collapses. Section 4. The breaking point. 2008 and beyond. In 2008, the formula cracked, but only for those at the bottom. Banks had repackaged debt into toxic assets, betting that housing prices would never fall. When they did, millions lost homes, jobs, and savings. But the same banks that caused the collapse were bailed out with trillions in newly created money. Their losses were erased, their profits restored. Debt isn't a burden for the elite. It's a business model. And as long as ordinary people remain trapped in cycles of credit and repayment, the formula keeps spinning, turning promises into profit. Section 5. The new era of invisible debt. Today, the formula has evolved. You don't even have to sign for a loan anymore. Your digital life is collateral. Credit cards by now, pay, later apps, student loans, mortgages, crypto leverage, all operate on the same design. And with central bank digital currencies, CBDCs, on the horizon, the formula may soon be automated. Every transaction, rate, and repayment managed by algorithms. Debt won't just be a choice. It will be the operating system of the global economy. And the programmers, the same institutions that profit when you owe them. Section 6. The real cost of debt. When you're in debt, you're not just paying money, you're paying time. Every hour you work to pay off loans is labor already owned by someone else. Debt transforms human productivity into a permanent profit stream for those who create money from nothing. That's the formula. And it works perfectly because most people never see it. Section 7. Modern parallels and hidden patterns. Look closely. The pattern never stopped. Inflation rises, making debt cheaper, but your purchasing power falls. Interest rates drop to stimulate growth, but mainly to keep the debt system alive. New technologies promise freedom, yet each one becomes part of financial surveillance. The formula adapts, but the outcome is the same. Debt grows. Wealth concentrates. Control tightens. Ending takeaways, warning, and call to action. Takeaway number 1. Debt is not a flaw in the system. It is the system. The more you owe, the more valuable you become to those who created the rules. Takeaway number 2. Money today represents obligation, not value. The richest don't work for money. They own the mechanisms that create it. Takeaway number 3. Freedom begins when you stop feeding the formula, by understanding how money, credit, and inflation really work. Final thought. The secret formula isn't hidden in a vault or a code book. It's written into every loan, every paycheck, every government bond. Once you see it, you realize you were never meant to escape debt. You were meant to power it. Call to action. If this opened your eyes, share this video. The more people understand how the debt machine really works, the weaker it becomes. Awareness, not money, is the only currency they can control.